Half an hour away from the opens in Hong Kong, Shenzhen, and Shanghai. You're watching the China Show. I'm Yvonne Man with David Ingles.
Let's get to your top stories this Friday morning. And yep, we're almost there. Stocks across the region rebounding to cap what's really been a roller coaster week in markets after signs the U.S. labor market resilience lifting Wall Street on Thursday. Now, this hour, of course, we get inflation numbers coming out of China. July price numbers are set to show consumer demand still in the doldrums here as factory deflation deepening for the first time expected in 4 months. Plus, in our exclusive series taking you inside the Adani Group, we asked the boss of their consumer businesses what they've learned from the turmoil following that Hindenburg report.
Now, from an optic point of view, we've become very clear that we go out and communicate more transparently about the structures and about things like the finances.
Looks like we made it. How are you all feeling after this week, guys? It looks like right now we might actually be ending this turbulent week on a slightly more positive note. That dip buying seems to return here in Asia as we start to see more of that carry unwind. That seems to be, maybe we're turning an end to that sort of yen carry trade unwind. So certainly that is one thing that's really lifting this. Also, that U.S. jobless claims number overnight, right, where basically we saw jobless claims tumble the most in nearly a year, maybe suggests the U.S. is not in a recession after all. So that economic angst really taken out of this market, that certainly is helping the likes of equities here this morning. We're punching about 1% higher. S&P yesterday had one of the best days since November of 2022. Treasury yields were actually spiking higher. We've stabilized a little bit in the Asia session, but you're seeing that cross through to Australia and the JGB market here this morning. And we're watching Taiwan. There you go, coming online. There's the TAIEX. We're up close to 3%. That's really been lifted by Taiwan Semi. There you go, 3.5% upside here as well. So you are seeing tech stocks catching a bit here today. SoftBank certainly have a recovery after the stock sort of tanked after its earnings yesterday as well. We're seeing upside about 6% in Tokyo. And dollar yen looks like we're still seeing some weakness at 147 levels. You're starting to see more of that risk taking here. Look at Bitcoin. We're still seeing about 2.5% gain for the cryptocurrency. The U.S. dollar is flat this morning. And we are continuing to watch what happens when it comes to the tech plays here. So not just TSMC, but you saw the Golden Dragon Index overnight. It actually had a pop about 2% or so. So that might have some tailwinds for the China story as well. And you take a look at what the approach to the open is looking like here today. Obviously, we have those inflation numbers due at the bottom of this hour. So that's going to be top of mind here if we continue to see those deflationary dynamics play through. But you're looking at what really has been this showdown in the bond markets that seem to have intensified this week, right? When you're talking about, more affluent provinces and cities that are basically halting bond trading in some ways when it comes to the sovereign market. That certainly did pull some yields higher. You're also starting to see the CGB market, the belly of the curve, which used to be that sweet spot, is actually being targeted by some, banks and the PBOC. So now what does this mean for the yield curve overall? You are seeing the long end of the curve picking up a little bit higher here. That Chinese 10-year yield is at 219, 239 levels for your 30 yield right now. But futures punching pretty high this morning, Dave.
Yeah, we did get the selling in the 7-year. And of course, today, the big item on the CGB agenda is that 50-year bond sale, which we'll get more details on that in about 90 minutes or so. But certainly it's useful, given it's Friday, and to take a massive step back and just look at how markets have traded this cross assets, right? So, we've been debating, is it a slowdown? Is it a hard landing? Is it a recession? Somewhere in between that spectrum. When you look at what global equities have done, MSCI all countries down for a fourth week, which is the longest losing streak going back to December 2022. And you look at what's underperformed, high duration, IT, cyclical sectors, and what has outperformed this week, defensives, utilities, and rate-sensitive real estate has actually done very well this week. Industrial metals on the commodity space are down a fifth straight week. So that's everything from copper, iron ore in China, that's rebar futures, hot-rolled coil, for example. And of course, the story this week is central, ground zero, if you will, is Tokyo. When you look at the topics index, the 10-day vol, actual vol on this is only comparable to 2 times in the last, pretty much in record. GFC, and you go all the way back before that to when the bubble burst in Tokyo. The difference between now and I guess the last 2 times we had vol like this was, where's the crisis now? What caused this, and does this continue? Joining us now to wrap up what's really been a fairly eventful and tiring week for most of the market, Aisa Ogoshi, Asia Pacific Equities PM at JPMorgan Asset Management. Joining us, in fact, they're out of Tokyo. Aisa, good morning. Are you ready for the weekend? How's your week been?
Very much, yes, thank you.
Okay. How did you guys handle the moves this week? Did you sell into that rally, sell into that drop on Monday, or did you pick up something nice for yourselves?
Well, to be honest with you, there's been very little movement for our portfolios. I think what we need to see first is for the volatility to settle, and then we've had plenty of time to reassess, and then we can get some trades on next week, hopefully, when the markets are a little bit more calm.
Yeah, what signs are you looking at to make sure that we see some calm and maybe this market approach a bottom?
It's very difficult to, assess the exact timing, but this has been coinciding with the earnings reporting in Asia, also in the US. We have a lot of data to process. And again, I think just going back to basics, which companies are doing better than expected, which companies are not delivering. These are the data or the trends that we really focus on, not necessarily just the market volatility.
Okay, well, it's a timely comment that you're making there, because we are in the thick of earnings season in Japan, and the way the market is reacting and punishing, subpar earnings is substantial. Shiseido, and you have a few more today down double digits. Aisa, what do you make of the current earnings season there in Tokyo so far?
So far, obviously, the stock price moves have been exaggerated along with the market volatility. But in terms of the earnings themselves, I think there's been very little surprise from our perspective. So, for example, the China consumer exposed names obviously are still showing weak trends. The tech names, there has been some divergence, but in general, many of the tech names, as we expected, are doing well still. So in terms of earnings, again, we tend to think the market volatility is telling us something, but if you look at the actual numbers, they have not been, they've been, as expected.
Given this whipsaw, I'm just wondering, does it change the psyche at all? In any way? What does it mean for stock selection? Do you think trends have actually changed? Or as you mentioned, tech is still doing okay. Can you still stick to those winners?
Yes, obviously, positioning had been extreme, especially in the tech sector globally. And I think that has some adjustment to come. I think another point is that, it has been an AI, NVIDIA-centric tech rally. I think that may diversify into other subsectors going forward. And again, the key is to keep an eye on the earnings trends. Yes, and then, it's easy to panic in these times, but really just sit down and look at the numbers and then reassess our positioning. This is what we tend to do.
Yeah, well, I saw the calm in your voice is certainly, the anchor we need in a storm like
Soothing.
This. Yeah,
yes.
let me say that first. So I'm looking at your top holdings, and not to get into specific names, but certainly you look at the names you have. The TSMCs, you have SK Hynix. A lot of it is still leaning towards AI, and you mentioned we might see a rotation out of that theme. Do you guys anticipate reducing your exposure to the AI theme?
I would say not reducing overall, but just becoming more selective. Maybe just, improving our quality exposure within those sectors is one. And I think outside of tech, there are many areas that are still doing very well. So, the Japan corporate governance and shareholder return theme is still ongoing very strongly. In Korea, we have a similar theme as well. So it's not just about tech. And I think, again, it's really important to observe the actual trends and observe the actual earnings and then decide upon that.
It seems like what's really dominated the narrative of late is what central banks have been doing, especially when it comes to the BOJ. Do you think that the BOJ can still hike rates this year, or do you think they're a big gunshot, just given some of the comments that we heard from Yoshida this week as well? And do you expect the yen to strengthen from here?
Yes, well, central bank policies is very difficult to predict. What I can say, or what we would like to remind ourselves, is that the monetary policy normalization is positive for Japan overall, and we did want to see the yen stop weakening, and that's a very big positive again for the domestic Japan economy. So, very difficult to call the timing of the next rate rise, but I would emphasize that it is not a negative, unlike in the other developed economies. Raising rates for Japan is a positive, and this is an ongoing normalization process.
Right, and Aisa, to your point, I think the issue is not so much that the BOJ is normalizing policy, but how they're communicating their objectives. I mean, do you think they messed things up this week as far as messaging goes?
I think timing was very unfortunate. So if you look back, they raised rates on Wednesday. Wednesday, Thursday, the markets were not as volatile, but then came the news out of the U.S. Along with some earnings disappointments. But of course, I think, I hope they will be a little bit more careful. But underlying data from Japan, I know that domestic macro, GDP numbers have not been great. But if you look at the more micro aspect of, for example, wage hikes, we see labor shortage everywhere ongoing. And so we believe that the wage hike trend will continue. So all of those things together, we don't necessarily feel that raising rates further is not out of the question.
So out of your Asia equities portfolio, I mean, how are you looking? I know we've talked about it sector by sector, but in terms of best markets, are there ones that you're looking at that are likely going to outperform this year, and what are they?
Yes, that's a difficult question. Going back to, we always want to go back to valuations, and it's China undoubtedly has been the cheapest market within Asia. This is where we have been focusing on stock selection over the past couple of years. Policy tailwinds are starting to appear as well. So we feel that China can actually be outperforming when the other markets have been so volatile. We also know that China is probably underowned globally, so that also adds to some attraction there. And I still feel that Japan has a lot going for the market. And once the volatility in currency and markets settle, we feel that Japan is still very attractive.
Aisa, thank you so much. Aisa Ogoshi there, Asia Pacific Equities Portfolio Manager at JPMorgan Asset Management. You deserve a break this weekend, as of all of us. Still ahead on the China show, Kweichow Moutai planning generous cash dividends as its share price slides. Going to get a taste of what might be on offer with Morningstar's Jennifer Song joining us a little bit later on. We're also counting down the opens of trade in Shanghai, Shenzhen, and Hong Kong. We're also counting down to those inflation numbers coming through out of China as well. This is the China show. Futures in positive territory this morning. Your RMB fix just crossing the Bloomberg here, 714.49. So it's the second day that we're seeing the PBOC set that fixing above that 714 level here as well. So certainly seeing a little bit more of, I guess, weakness that they're willing to tolerate when it comes to, given the massive sort of reversal we've seen in dollar China, given, of course, that unwind of that carry trade. And we're also coming down to the inflation numbers as well, and how that, could it actually impact this bond market too? Yeah, and,
the lack of it is really fueling the bulls here, despite the pushback we're getting, which we'll get to in just a moment out of the PBOC and officials there. In terms of the median estimate, 0.3 on headline CPI. PPI is expected to fall from the previous reading on the back of this sort sort of trend lower we've seen in commodity prices. If you're curious about the range on CPI itself, it's negative 0.1% all the way up to 0.5% positive. So fairly wide range when you look at this specifically, the dispersion, I guess, of where we go from here. Yeah.
Yep, and those inflation numbers will be in focus amid, of course, this relentless bond rally. And it seems like this sort of battle to avoid this bubble really intensified this week, right? Just as what we heard in the last 24 hours. State banks selling 7-year bonds, rural lenders asking to suspend CGB trading, regulators also slowing the approval for some new bond funds as well. Let's bring in Bloomberg Intelligence Chief Asia, FX and Rate Strategist Stephen Chu to join us here to tell us what impact. I mean, we saw yields pick up a little bit. Do you think, people are finally sounding the warnings from the PBOC?
Just a little bit. Like if you remember, at first PBOC just talked about it. The market sort of yields rebound a little bit, but then it dropped again. The 10-year reached another record low. So now they have to follow up with actions. So now they're telling the state banks, help me to sell the bonds. They're telling the rural banks, who are the major buyers of this bond, do not go against the state bank selling. So we see yields picking up. As you said, the 7 years, the latest focus, they're going to keep doing that. But is that going to be enough? Because actually, in our view, it might not be enough. The PBOC may still have to sell it themselves. Because earlier they've prepared, they're going to borrow bonds from the primary lenders, and they're going to sell it later. Because that will be the last signal that market will really have to respect what they're doing. And yields are still too low in our view. 10-year yield, we think at least will have to rise towards a 2.2 to 2.3%, which is where the 1-year MOF rate is right now. And that's probably where the PBOC is more comfortable.
So how do I trade this now? Do we have a better idea of where the specific lines in the sand are right now? How do I know when they're about to tap their inventory? To your point, they haven't really sold their own inventory to counter the market. How do we know if we're close to that point?
I think they will take their time. For example, taking another week and see whether this sort of state bank selling will continue to have yield rising further, or market will just say, oh, I don't believe in you, because like CPI coming out soon might suggest this inflation will continue, and hence like real yields are still too high. The PBOC will still have to cut rates. Same story. They will probably just buy bonds again. If that's the case, then the PBOC will have to come in. As we say, the line that we are watching for 10-year yield is at least 2.2%.
We talked about the unwind of the carry trade. Some say, we're close to the end of it. How is that going to impact the renminbi, you think?
I think there are a lot of numbers out there. JP talked about, 75%, something like that. Yeah. Wow. There are all sorts of models you can use, positioning and out there. But the fact is that we know that as long as when the Fed really cut rates and the Bank of Japan probably have to really still hike rates, then we're going to see further direction towards the carry unwind. For the renminbi, actually, if you look at the percentage change over the last month, it's actually quite stable. Of course, the yen is the protagonist. It has rallied against the dollar for like 11, 12%. Yeah. But the CNY actually just rallied for 2%. If you look at it that way, of course, it's one of the favorite funding currency, but it's actually quite stable compared to the yen. So, of course, if we have a continuation of the carry trade unwind, for the yuan, stronger yuan, but it wouldn't be drastic.
Stephen Chu, thank you so much. To wrap up what's really been a manic and mental week in markets, our Chief Asia FX and Rate Strategist. By the way, we have a 30-year CGB auction today in about an hour from now. Futures are flat going into the Friday session, although we are seeing a rally across Asia Pacific today, so we'll likely get more upside likely than downside in the opening minutes. A preview is coming up. This is Bloomberg. Welcome back. 7 minutes to the opening bell, and just a preview of the sort of items to watch today. So we talked about inflation numbers coming through in a couple of minutes. Watch for that as well. 50-year bond sale, ditto. Falling HIBOR, I'll get to that in a moment here. And of course, this rout we're seeing in industrial metals. We're down about 20% on the Bloomberg commodity industrial metals subcomponent index there. So it's been a challenging time. And we are also in the window, speaking of data, for credit numbers coming through. And if last month was any gauge, and again, I'm going to put my personal bet out there, that's probably going to be a Friday 5-6 p.m. story. We'll see. Okay, going into the open today, a rally consistent with what we're seeing across the region. We're better by 2% on the Hang Seng Tech Index going into the open today. So a rally is likely upon us in the opening minutes or so. Another weak fix coming out of the PBOC, north of 714. As I promised, HIBOR rates with rates coming down, the Fed conversation, and the Hong Kong dollar peg. If you have a mortgage out there, good news for you. We are likely going to test the lows of the year. on 1-month HIBOR. There we go. So going into lots of things to watch going into the open today.
Analyst actions. There's a bit of earnings flavor to all this here today. We're watching the chip stocks like Hua Hong Semi. Those 8 shares raised to outperform at Bernstein. This is after we did see, certainly when it comes to the earnings side of things, looking a little bit better. But you take a look at how China Mobile is doing. That was a second quarter profit beat. That's despite the soft revenue outlook as well. So certainly that's one to watch for HSBC. Those 8 shares cut to a hold. And Swire Pacific cut to a hold at CLSA, but that stock did surge to a record yesterday on the back of those dividends that were announced and the like. So we'll get you a bit of a recap of those earnings in just a little bit later on. Stocks in focus here today. We're watching crypto stocks in particular, just given the bump up in Bitcoin overnight here. So just more signs that risk is putting back on the table here. So the likes of Meitu is up 2%. And we're also watching, as he talked about, Hua Hong Semi, SMIC, the semiconductor space. TSMC certainly is one that's been lit afire again, given this rebound. And you're seeing the likes of Hua Hong Semi and SMIC both up about 7% for SMIC in particular. There's some stocks we're watching very closely here, too. What we heard overnight was the U.S. adding 5 Chinese entities on a forced labor sanctions list. So there's 2 of those which are listed here in Hong Kong. We're talking about Century, Sunshine, and Rare Earth Magnesium, but not seeing any movement so far in those stocks. Yeah,
going into today, so we're looking at 3 weeks of losses on the CSI 300, and I think Morgan Stanley had a note, and we're trying to find the details of that in a moment. So we really lost some momentum, although I should also mention as price has come down on short volumes and turnover has also petered out as well. And I think a northbound turnover is, I think, on the cusp of turning negative.
For the first time ever?
For the first time ever as well. So we're looking at that. Obviously, earnings, as you point out, right? So you have Moutai, and I think on the Moutai story, it's the dividend, which I'm curious to hear Jennifer Song's comments about, because they're, the stock's not done well, but they're upping the dividend to increase the shareholder return. And well, apart from earnings, the SMIC story is interesting. You were talking about this earlier. The CEO is now talking about geopolitical tensions driving, I guess, demand for their, as a fab, for example, in China as well on the TSMC story. So, yeah, and on top of that, I mean, what else?
If you talk about just global repricing of what the Fed's going to do, it's been so sharp, right? I think we're pricing in at least 60 basis points of emergency cuts just a few days ago, and now we've swung back to the other side of things, where basically we're talking about is a toss-up between 25 or 50 for September now. So certainly the investor mindset when it comes to this economic slowdown and how bad it is really changing every single day.
Yeah, well, at least we're more stable than we were on Monday. And Saturday is close. We have a session though ahead. This is Bloomberg.
Welcome back. You're watching The China Show. We're counting down the open of markets and the countdown to the weekend. Guys, we deserve it after all this market volatility, right? So right now we're at least seeing things a little bit more calm, right? As we talked about, we're seeing that basically globally after that U.S. jobless claims report certainly did lift sentiment that perhaps, the Fed's not going to have to do these emergency cuts that were priced in just a couple of days ago. So there you go. You're seeing a rally underway in Hong Kong. AP futures are still punching positive here, and we're just seconds away from inflation data out of China.
I have my screens ready for the breaking news. 0.3% on CPI, negative 0.9% is your median projection for producer prices. And as we show you the opening bell in a couple of seconds, we'll keep an eye, of course, on our screens on what the inflation number looks like here. CSI 300 on track for another weekly loss. We are on track as far as Hong Kong goes for a big move up in the open, consistent with the rally we're seeing across the region. We're coming off, by the way, one of the best days in the S&P going back, I think, 1 or 2 years there. So the tailwinds are certainly in favor of the bulls and the brave today. No inflation numbers just yet. We'll talk about Moutai in a moment. We do have Ooh, this is a good number. Consumer prices coming in at the highest end of forecast here.
All right, 0.5% for July. So that was beating expectations, and continue to see prices pick up just slightly on the consumer side. Producer prices as well. I mean, we're basically in it's the same as what we saw the previous month of a negative print of 0.8%. But economists were expecting that possibly that deeper deflation was going to happen. But it doesn't seem like that's the case just yet right now. So recent declines have been slowing. I think we stabilized a little bit. But really, what's partly reflected in that, these numbers is really the lower commodity prices that we've seen. David's talked about industrial metals basically being pummeled of late here. So coal, oil, iron ore certainly contributing to those numbers too.
Yeah, I'm curious to see what the basket looks like, because I think, to your point, right, the food prices have been picking up, vegetable prices have been declining less, and that goes to show things like entertainment services has really been, I think, the soft spot for inflation. And when you look at some of the earnings coming through, I think Moutai, we'll talk more about that in a moment, the weakness in the consumer is forcing some of the wholesalers to transfer that weak pricing to retailers, right? I guess as a proxy for the consumer basket in China. But again, to reiterate, these are very good numbers as far as the forecast goes and as far as how far we are getting from that zero level. 0.5%, greatest scheme of things. If you joined us for the first time in 8 years, you'd probably say that's a very low number. But sequentially, we are seeing an improvement here in the inflation story in China.
Yeah, so things looking even better on the data side in China as well. So that's certainly lifting, risk assets here, not just what we're seeing globally. But yes, you're seeing Hang Seng markets are up 1.5%. HS Tech seems to be driving that charge here this morning. H shares are also up 1.5%. And we're watching very closely how these tech names perform. So you're seeing the likes of Alibaba up 2%, Tencent. We're at 1.5% upside here, just days before their earnings come out next week as well. So that's one to keep in mind for next week. And some relative strength in the renminbi. So it seems like we're still seeing a little bit of strength here, despite it was a bit of a weaker fix once again from the PBOC here today. And we're taking a look at one stock in particular. I think we showed it just now. There was a Kweichow Moutai where basically, the big surprise, I guess you could say, yesterday was these generous cash dividends, right? So this proposal to distribute dividends amounting to at least 75% of annual profit. That certainly has helped lifting the stock here this morning. Let's get a little bit more on the earnings outlook here with Morningstar. Jennifer Song, Senior Equity Analyst. She joins us now from Shenzhen. Jennifer, always great to have you on earnings day. Walk us through what your take was on this latest season. Certainly it was a bit of surprise, this cash dividend, and is it enough to kind of lift the stock out of its doldrums?
Actually, for the dividend, it's not completely surprised to the market because over the past 2 years, the company has also paid special dividend and the dividend payout ratio that's much higher than 75%. But the better thing is the 70% dividend, that will be the regular dividend over the next 3 years. So that will help to lift investor confidence for this company.
Okay, what do you make of the rest of the earnings, though? In terms of revenue growth, the margins, the fundamental story, and we'll talk about the stock in a moment too.
Yes. So for the result, actually, the second quarter growth is pretty much in line with the first quarter growth. So that is still pretty decent for this company. And it is ahead of the company's guidance for 15% sales growth for full year 2024. And also the cash flow, that's quite decent. That meaning the earnings quality, that's good. So this will help to ease investor concerns over a slower growth for this company.
The worry in the market has been this drop in wholesale prices. I'm just wondering, what's your outlook there? Do you think that these prices can trend lower? We've also seen some of these price control measures as well. Do you think that can actually stabilize retail prices too?
Yes, okay. Actually, until yesterday, we see Moutai's wholesale price already went up to 2,440 per bottle, up from 2,100 around the end of June. So that means the wholesale price is still stabilized already. So we think the company has done a couple of actions like suspend the delivery of its Xunfengjiu and also suspend the group purge and also the 12-box baijiu sales. So that action also helped to lift the overall market price. And from now until the next holiday, we think the restocking process at the distributors will start. And we don't expect to see the material lower wholesale price in the coming few months because the upcoming hot season will be the Mid-Autumn Festival and also the October Golden Week that will help to lift the overall wholesale price.
Yeah, Jennifer, you bring up a interesting point because one of the things I think the company's been trying to do is bypass the wholesaler in terms of direct sales because effectively they're leaving some margin on the table. And do you see at some point in the next 2 years that direct sales will become a bigger part of the revenue pie than the current model?
Yes, the company's direct sales continue to grow, and to about 40% in the second quarter of this year. So the direct sales continue to grow. That's the strategy of this company. But wholesalers that still accounts for about 50% of the overall sales, and it's co-product like Feitian, Moutai, that's only sell on the wholesaler part, not on the its own store. I mean the 500 ml bottle one. So because the wholesalers already maintain a very strong relation with the company, it's unlikely the company to cut off all the wholesalers' quotation to its self promoted platforms. So we think wholesalers still play a very important role for this company. And also in regards to the recent price volatility, wholesalers is a strong party to help to stabilize the price. So we think wholesalers are still important for this company.
What we've heard from a lot of chatter on eco debates is whether we're going to see some sort of consumption tax reform. I'm wondering what your take is on the potential tax risks on the sector in particular. Are we getting much visibility on the reform map, and what impact could it have on the price of baijiu?
Okay, so for the consumption tax, actually currently it's charged on its ex-factory price and paid to central government. And the potential change the market is talking about is to shift the charging point to the wholesaler or retailer set. So that means the base will increase for Moutai, but not for many of other baijiu, because like Wuliangye and Luzhou Laojiao, their wholesale price that's currently lower than its factory price. So that will have a limited impact to those company, but will have higher impact to Moutai. However, given Moutai's wholesalers has a very big margin, which is over 100%, so we think that offers pretty much bigger flexibility for this company to pass the impact to the channels, now the company itself. So that would lead to limited impact to its retail price and also the company itself.
Jennifer, would you recommend I buy some Moutai stock at these levels with these valuations, or do you have other recommendations within the sector that make better sense in your view?
Actually, for Moutai, based on our DCF model, our interim value of this company will already see the company has undervalued. So we think at this point the company is quite attractive. Also, we like other premium baijiu, like Wuliangye, Luzhou Laojiao, they are also quite resilient in demand compared with a lot of other baijiu company in China.
Jennifer, thank you so much. Have a great weekend ahead, and thank you for, again, joining us and unpacking these numbers for a senior equity analyst there at Morningstar. Speaking of earnings, so next week is going to be a fairly important one, material for a lot of these big names. You have Baba, JD.com, Han High Precision, you have Lenovo coming out. Lenovo's done very, very well, by the way, in terms of the market performance so far. So, yeah, we have almost one for every day of next week, and we'll get to that. And, of course, we're going into the weekend with a decent rally, 2.5% on the tech index there.
That's going to distract us until we get NVIDIA in about 3 weeks' time.
Or until some disaster happens in Japan again, like the market did on Monday. Hopefully not.
Let's stick to that tech theme, though, because investors are still a bit unsure whether the AI-led rally has more room to run. A number of AI names still look attractive in Asia, though, even though the outlook is less bright in other regions. Let's bring in our reporter, Annabelle Drewlers, that's joining us for more. What are you seeing, Belle?
Well, I think what we're seeing is that these names are just still a force to be reckoned with, really. If you take a look at this chart here, TSMC, Samsung, SK Hynix, going back to the GFC, these stocks made up around 4% of the broader emerging markets index. Today, you're looking at around a 15% concentration. Let's change it up and take a look at some of the factors that are really feeding into that positivity that we're continuing to see here. This taking a look at the profit estimates that we have for Asian AI stocks. Again, it's continuing to climb here. That's the line in white, especially when you compare it, as we said, to what you're seeing in other regions where the outlook is not quite as rosy. Philadelphia Stocks Index, for instance, that's the line here in blue, and the line in yellow is that broader Asian benchmark. Drilling down into those names that I was just mentioning, in particular, Samsung, SK Hynix, TSMC as well, you're continuing to see analysts, if you take a look at this chart, that are upgrading their earnings forecasts, particularly when you compare it to what you're seeing in other markets, for instance, where you've seen Microsoft. If we have that chart, we can show it. But anyway, Microsoft, other big Alphabet, Apple in the US, they're all not seeing quite the same amount of positivity. Here, that's taking a look at that percentage change of earnings per share consensus going back to June of this year, and you are seeing that move there for SK Hynix and Samsung, TSMC.
Yeah, and all that being said, investors are still hedging some of their bets. They're not exactly, they'd probably be buying the dip, but they're not going all out on this.
Yeah, not fully in the clear just yet, and you've seen investors that are paying for protection on names like Samsung, like TSMC. This chart is here taking a look at the volatility skew, for instance. You're now near the highs that you've got going back to September, October of last year. So again, it just tells you investors are still expecting some sort of movement here in the stock. But you do need to sort of put it in perspective as well. If you take a look at this terminal chart, the moves that we've seen in the broader Asian gauge for tech stocks in particular, you're down around 20% from the peak. But if you take a look at this chart, again, put it in perspective here, because you compare to those drops that we saw during the GFC, during the dot-com bubble burst. That was a drawdown of 80% at that point in time. So yes, AI stock valuations below their 10-year average right now, but Dave, Yvonne, investors are still saying this is an opportunity to buy.
Okay. We'll see what NVIDIA looks like then. Well, thank you so much, Annabelle, there with, our story to wrap the week here. Just to recap the inflation numbers which came through out of China. So the headline number came in at the very matching the highest estimates, and we are seeing yields, not just across the board, the 10-year yield is up a further 2 basis points today, on top of the move of 3 basis points up yesterday. So yields are continuing to back up as this inflation story didn't really come in favor, in line with what the bulls had wanted, maybe.
Yeah, and it's interesting, right, because this coincides with what the PBOC has been doing, right? They're telling state banks to restrict, bond trading, the like, and it seems like it's working for now. But our very own Stephen Chu from BI says, look, it might not be enough. You actually need to see the central bank itself do a bit of borrowing before you actually see a bit more traction on that trade. Still ahead, though, we're going to speak with Gautam Adani's nephew, Pranav, who's overseeing the Adani Group's consumer businesses. Our exclusive series taking you inside the conglomerate. Up next.
India's Adani Group has told Bloomberg it's confident of meeting a 7-year deadline to revamp one of Asia's biggest slums, and that's despite a threat from the main opposition party to halt the project if they win this year's state elections. Now, in the last of our exclusive interview series with the Adani leadership team, we meet the family member in charge of the group's most complex and high-profile project.
This is Pranav Adani, nephew of billionaire Gautam Adani, one of the most powerful and controversial figures in Indian business. He probably looks out of place walking through Dharavi, which is Asia's biggest slum, located in India's financial capital, Mumbai. But he's visiting this area made famous by the movie Slumdog Millionaire because he's leading one of the most challenging projects the Adani Group has taken on.
Thank you.
Pranav is spearheading the redevelopment of this network of makeshift shelters and structures, which is home to about 1 million of the most disadvantaged people in the city. The Adanis see developing the area as key to Mumbai's evolution as a modern city. However, many who live here worry they'll be left without homes and livelihoods. They fear they will have to move out of their houses and close their businesses to make way for modern apartments, offices, and malls. Bloomberg's Anto Antony asked Pranav Adani in an exclusive interview about the challenges the controversial redevelopment poses for the Adani Group.
It looks like a very complex project to execute because there are so many socio-economic challenges. How are you planning to go about it?
Dharavi project is, of course, a challenging project. It's a project that since the last almost 4 decades, different governments have been trying to redevelop. Finally, now they've been able to do it. We were very aggressive while bidding. We bid almost 2 times, twice the second bidder that we had over there. While yes, it is a good financial project, but at the same time, what is important to us is the kind of purpose that we will be able to do for a project like this. The purpose to be able to change the lives of almost 1 million people.
Pranav is confident that the group will complete the Dharavi redevelopment project in 7 years. But it's not the only thing on his plate. Pranav, who is the son of Gautam Adani's elder brother Vinod, is in charge of the group's most consumer-focused businesses through joint ventures with food processing giant Wilmar and French energy major Total.
You was at BMC before that?
He's also responsible for protecting the Adani brand, a role that's attracted fresh scrutiny since the group was accused of fraud and stock manipulation by the short seller Hindenburg Research last year.
As the senior most among the second-generation leaders, what could you have done differently to avoid the kind of allegations which were posed by Hindenburg?
So I think, yes, there were learnings, I would say, from the whole Hindenburg episode. As a group, we have always been very focused on operational excellence, on execution. There are times when we have missed out in the kind of communications that we should do to our shareholders, to media in particular. Now, from an optic point of view, we have become very clear that we go out and communicate more transparently about the structures and about things like the finances. In particularly, I don't know if you lately heard that we are also very clearly working towards bringing down the EBITDA to debt ratio. So now we are getting our ratios also, and we are going out communicating more.
Pranav Adani there, who runs the Adani Group's consumer businesses. And we have our exclusive coverage inside Adani continues later with a special report that's coming out today, 11:30 a.m. Hong Kong time, with an encore presentation at 7 p.m., which is 4:30 in Mumbai. This is Bloomberg. Welcome back to the China Show. Here are some of the big headlines we're following from around the world. The U.S., Qatar, and Egypt are calling for Israel and Hamas to resume ceasefire talks on August 15th. The framework for a truce will be based on principles outlined by President Biden, including a complete halt to all fighting and a prisoner exchange. Iran says Israel must agree to a Gaza ceasefire to reduce tensions in the Middle East. Republican presidential nominee Donald Trump is pitching a series of debates with Kamala Harris in September. Trump's team is offering debates on Fox, NBC, and ABC. The Harris campaign says it's happy to have a conversation about additional debates beyond the one they've already agreed to. Speaking with reporters at Mar-a-Lago, Trump criticized Harris for avoiding media interviews since securing the nomination. Trump also told reporters the president should have some say over interest rates and monetary policies. Such a move would go against the longstanding practice of keeping the Fed independent from political actors. Trump has repeatedly complained about the issue and criticized Fed Chair Jay Powell for being both a bit too early and too late on moving interest rates.
I think that in my case, I made a lot of money. I was very successful, and I think I have a better instinct than in many cases, people that would be on the Federal Reserve or the chairman.
All right, speaking of inflation, imagine if he won, and imagine that he was running, Donald Trump was running the briefing, the Fed brief, the briefing that follows every meeting. And how
the market would move.
And how eventful that would be, and how markets would take every word and an extended briefing, which might actually bleed into the Asia morning anyway. Inflation. Coming in slightly above expectations on consumer prices and slightly not as bad as far as the wholesale prices are concerned.
At least we're seeing a similar trend continue, right? Whether it's, you're starting to see the declines in some of the deflationary pressures subside a bit. So that's continuing on, at least here today. And that certainly is helping some, at least when it comes to some of these bond well, the PBOC at least, when it comes to what this bond rally is going right now.
Yeah.
So that inflation number certainly is leading to yields to take a little bit higher. This is on the back of already efforts that we've heard, multiple sort of things that we've heard in the span of 24 hours of how they are now targeting that yield curve, and really not just targeting the long end, but even just the belly, and widening those targets as well. So, but overall, though, we are seeing still a bit of risk being put on here in Hang Seng and MSCI China. We're still seeing gains of more than 1%. HS Tech is still up some 2%. And there you go. You're still seeing that sell-off in CGBs. Yeah, we're up across the curve there. And following, of course, yesterday when I think it was a 7-year that was being sold by some of the banks as well, right? Not so much a PBOC just yet. And to go into the broader market story here, we are seeing a rally across the region. Hua Hong Semi, case in point, though, is going the opposite way. That's an earnings story. We're seeing a big drop in the stock, although the rest of the semiconductor plays in the region are doing quite well this Friday. Plenty more ahead. This is Bloomberg. Welcome back to the China Show. Here's a look at the HSI just a half hour into the session. And yeah, we're still off the session highs, but we're still talking about a rebound here that is sticking in some ways. And we're seeing that basically globally. But keep in mind, we're still on track for global stocks to be down for a 4th straight week. And really the whipsaw that we saw across markets is still leaving us a little bit lightheaded about what's to come. But yes, right now, at least we're breathing a sigh of relief as we count down to the weekend, Dave.
Yeah, leaving us also fatigued.
A little bit.
Yeah.
Not so much you. You only joined yesterday, so.
Yeah, but I already feel it. You know, I can't even imagine what you feel going into this weekend. I've been here just 2 days.
You always leave me hanging on big market days. Always.
And what was the rule? So I should never take a day off again. Inside baseball here, of course, you could make a lot of money based on the days I take off, because you will get a market crash. I think the last few times I've gone off, markets have had an episode. Anyway.
What do you know, David Ingles?
Okay, yeah, what do I know? I'm off on Monday, by the way. I'm kidding. 1.5% as we go into the weekend here. Nikkei's up 1.4%. 10-day vol in the Nikkei is actually now comparable to only 2 times in the last couple of decades. GSC and the post-bubble bursting. We are getting a rally across some of the semiconductor plays. Yields, as you can see on the Treasury curve, are down. We're upward to about 4% on the 2-year yield. The other story we'll talk about later, though, is this inflation number which came through out of China, which came in matching the highest estimate. Is that the start of a turn of higher inflation? We'll see. Now, as far as the last couple of weeks is concerned here, so this is a story we've been tracking too, the declines in industrial metals, so everything from copper, iron ore, rebar futures in China, all together about 20% from the May peak, which is interesting. This actually peaked on the same day that Chinese stocks peaked, May 20 of this year. Correlated, coincident, I don't know. Positioning for a slowdown, as Yvonne is pointing out, 4 weeks of losses on the global equity benchmark on MSCI. High duration, cyclical sectors like consumer staples and discretionary underperformed. Utilities and real estate, I guess, maybe an expectations rates are coming down, outperformed, and we talked about industrial metals coming down. So are we really going to see a slowdown ahead is the question, I guess.
Yeah, let's bring that question to Monica Hsiao, founder and CIO at credit asset manager Triada Capital. A lot of questions about what the Fed, where we are, whether it's soft landing, recession. Do you think the Fed can still land or make this landing right now?
So I still think that the base case is the Goldilocks scenario. Granted, I would up, the probability of a recession, but we are definitely not looking at a looming one. I think there was a huge overreaction, and I think by now we're pretty clear that it was really about deleveraging through the carry trade rather than something really fundamental about macro. I think when you look at the overblown fears, we should look at the overall data in the U.S. The consumer balance sheet is still relatively healthy. There's been a lot of talk about, consumer loan delinquencies, auto delinquencies. Actually, it's interesting because overall, the delinquencies of overall consumer debt is at lows of 4%. And credit card debt is only about 6% of the total consumer loans. So the spending power is still there.
Yeah, so going into the next Fed meeting, though, what the Fed might do might not be what markets would want. Do you think we're set up for a disappointment if they don't give us 50?
You know, I don't think the base case should be 50. I think that all this talk about the Fed being behind the curve, I don't agree with. We're nearing that point where they should do something. So September, I think, is pretty well flagged. I think 25 bips is still the base case. You know, I think we're going back to what we had end of last year, which was like over dovishness and then, you know, coming back down. And so, you know, the market is pricing in about 100 bips right now. I personally think it's maxed to 75 bips. Today, I would still be more concerned about sort of the tail risk of reflation if they cut too quickly rather than the other way around. You know, I think it really goes back to all the broader pictures that's underpinning the U.S. economy overall. And, you know, I think we really have to keep in mind that GDP is still growing at a healthy pace. And, you know, aside from sort of consumer spending, we see defaults coming down on high yield and in loan market. So none of this is pointing to a stress such that the Fed is really behind the curve.
Yeah, I think there's been some analysts that talked about this, right? Ruling out the possibility of emergency rate cut is because it sends a panic signal to the markets. And it also continues this unwind of the yen carry trades as well in some ways. But you're looking at, obviously, volatility that's still quite elevated.
Yes.
What's the best part of the market that you look at now to position and to ride this volatility?
You know, I was actually quite relaxed through Monday out.
You're kind of a rare one.
But I felt like, you know, it was obvious to me it was overdone, but also credit-wise, we didn't suffer nearly as much overall as equity. And I think my positioning going in sort of helped in the sense that, you know, I was more positioned for all-in yield rather than on a T spread, and that definitely helped a lot. So from that perspective, I would say that, you know, now credit spreads have come back alongside equity sentiment. So I wouldn't say credit on a spread basis is super cheap, but on the all-in yield, there's still a lot to be gained. And especially if you listen to a lot of the strategists about overall rates curve yields coming down, then you will still see people yield chasing.
What do you think next week looks like?
Well, you know, we have CPI, PPI coming up, and then leading into end of August, of course, we have Jackson Hole, and, you know, Powell's comments will be, you know, looked at with eagle eyes. I think that, you know, every data point right now will count, will matter. So as I said, you know, I still think the base case is that we can achieve a soft landing, but, you know, all the data points will be what determines whether it's 25 or 50. And although I think that it should be and more likely will be 25 bips for September. You know, the question is, you know, 50, I think, is still on the table, I would say. And then the question becomes, you know, is it going to be 75 bips or 100 bips this year? And then very soon, and then, you know, the next time I come back on TV, I'm sure it's going to be the talk about next year. You know, it's going to be about how accelerated this process will be. Right. And there's a huge divergence today about, you know, where the terminal rate should be. So I think every data point right now will be very important.
I guess the Fed discussion, you could translate that to the BOJ discussion, because some people are blaming that maybe the BOJ was the wrong timing to do this?
I would say, you know, wrong timing, badly signaled. You know, I think Uchida walking it back quickly sort of signals also that they were not prepared for this type of reaction. You know, maybe they'll be afraid of their own shadows right now because suddenly they see the power of what they could do. You know, it unfortunately happened at the same time of the U.S. Data, and so sort of that confluence of event and everything is relative today. So, you know, I think it's very interesting because we're looking at a time where a lot of other central banks are poised to ease, but waiting to see what the U.S. does. I mean, you know, BOJ is in their own camp. And now it's the volatility, I think, will come from the fact that people have a hard time reading the signals from Bank of Japan. And, you know, there is a question mark as to whether they know themselves now what the best path forward is.
Do you think the bar is higher for them to either hike or signal a future hike because of I guess, the mess that they caused this week?
Yeah, I mean, Ueda's called in to testify now. So I think that they have to consider a lot more how you, whether you should be nuanced or whether you are much clearer. But, you know, I think today it's reasonable to assume now that they're going to take a slower pace and probably not hike until December. Yeah. But, you know, I think the market roils like this when there's uncertainty. So, you know, as long as you give people the right signals, I think, you know, the market will behave in a more orderly fashion. So the direction may be the same, for example, with the yen ultimately strengthening, but the pace and the way you do it matters.
Yeah, everyone's talking about the yen carry trade. And do you see the correlations to other assets? I mean, do you see other parts of the market that are still at risk?
Well, you know, because of what happened with the yen carry trade unwinding and presumably causing margin calls, of course, everybody's then hunting for the next, you know, carry trade that could unwind. And there's been talk about, you know, the renminbi, but, you know, I don't think that that's quite the same at all with, you know, not the similar liquidity, but also the CNY and CNH strengthening. I don't think it's something that PBOC necessarily wants right now, as you could see from the fixing. Yeah. So I don't think it's quite comparable. I think what's interesting is the talk that comes out to compare what happened, this whole flash crash, to 2015 and the renminbi sudden devaluation. Yeah. And everybody's sort of reading into it now to say, okay, what is the path to after the rebound? Is there going to be more volatility? I think there is going to be more volatility, but probably coming out of sort of emanating out of other factors. And, you know, I think it never sort of comes out of the factor that everybody's already well flagged on.
Yeah, I was looking at my date. We're almost 2 days to 9 years. It's August 11 of 2015 when they devalued the renminbi. I mean, it was August, which reminded me of that. Can we make the assumption that yields, or when you look at Treasury yields, do you think we priced whatever the Fed's going to do, whether that's 75 or 100? And can I assume also the dollar falls, or is the dollar a different story than yields?
So I think that, you know, we're still a bit overdone pricing in of, you know, 100 bips. And I think that the probability of that 50 bip has backed down, but, you know, I think not backed down enough yet. More so, you know, there's, you know, the steepening, I think, of the curve will probably be a longer term trend. It's really just about volatility in the interim. But like I said, you know, there is a big divergence of views of where we end the year for the 10-year. As far as the dollar, you know, there was definitely overblown fears about, you know, the dollar crashing. I think the dollar could moderate, but all of this right now is about relative moves. And I think after what happened, you know, I think all the central banks will be kind of thinking about that coordination a little bit more.
Monica, have a great weekend.
Yeah. Thank you.
Monica Hsiao, their founder and CIO at Triada Capital. Just ahead here in shows, we discuss this dramatic shift in Chinese consumption patterns as buyers swap handbags for experience and memorable trips. More on the experience economy boom that's taking place right now. Next, this is Bloomberg.
All right, recapping that China inflation print that we just got here a couple minutes ago. And yeah, it was better than expected. In fact, CPI was one of the highest in terms of the estimates there here today. And still, we're taking a look at PPI prices still in contraction, but maybe those declines may have at least not as deep as they were before, too.
Yeah, the bar is maybe too low for markets, maybe too high, though, for our next speaker, David Chu, our Bloomberg economist, isn't impressed with these numbers. How do you interpret these numbers?
Well, if we have only one word, weak. Because if you look at the CPI, it's still positive. But if you look at the month-on-month, it's not so. And one thing we have to say that the pork price rose 20% year-on-year. And considering about 3% of the weight of the pork in the basket, okay, if we exclude the pork from the whole CPI, it means maybe 0 or even negative readings for this month. So it tells us it is weak.
Do you think that we can expect further PBOC easing then on the back of this data?
Not soon, because the PBOC just cut the MF rate by 20 bips last month. Actually, just 2 weeks ago.
Yeah.
It was a surprise cut. And we don't think the PBOC can take anything soon in the rate side because, I don't think they can do anything before the Fed takes any actions. Because if you look at the yuan, the CNY or the CNH exchange rate, the yuan appreciated a bit when the dollar weakened last week, but we saw it rebound again. I mean, the dollar CNY rebounded again. It means that the depreciation pressure is still there.
So outside of pork, are there other components of the basket that caught your eye?
Well, I think everything is actually weak. And if you look at the core inflation, it was the reading was actually smaller than last month. So everything told us that the sluggish domestic demand and the consumption was behind the move.
Okay, David, thank you so much. David Chu there. That quick debrief on the inflation numbers which came through about in the last hour or so. Now, one sector that is growing in China is the so-called experience economy that's seeing a boom as consumers pivot toward more core memories, personalized experiences. Jill Deeses, our news editor, is here with us to talk us through the sea change that's taking place among spending patterns.
Yeah, David, so it looks like people are really sort of trending in favor of, as you said, experiences rather than buying things. We've kind of seen sort of a downturn in the capacity for the Chinese consumer to really spend on goods, particularly luxury goods. You're seeing that really reflected also in, sales figures for LVMH, other, really, big luxury producers. It looks like instead where that money is going is into tourism and spending. They're kind of traveling more around China and actually want to spend on those experiences. You can kind of see this a lot in the data. If you look at retail spending on services for the first 6 months of this year versus last year, it's up about 7.5%. Take a look at that in comparison to goods spending, which is up only 3%. So you're really seeing that sort of shift into that spending more on services. I think that's also something that's reflected in a lot of the measures that the government is taking to try to increase spending on dining, tourism, restaurants, that kind of thing.
Yeah, I love this part of the story where they're saying sales of outdoor gear, if you're talking paddle boards and diving equipment, more than tripled during the annual shopping festival in June from the previous year. So you're starting to see more people. But is there more room for growth? Because you talk about some of these policies that we've seen from Beijing. It's heavily tilted towards manufacturing.
Yes, exactly. And look, I mean, there is certainly a lot of room for growth in the services sector. I mean, if you're looking just at, as a percentage of GDP, we're only at about 50% in China. Compare that to really, developed advanced economies like, looking at the EU, looking at the U.S., this chart that we're throwing up on screen right now, where you're seeing at that point, it's 75-80% of GDP is what those, the U.S. and the EU are looking at when you're looking at the percentage that services spending is making up. Again, China really only around half. So there is plenty of room to grow. And as you said, Yvonne, comparing that to this downturn in manufacturing, a lot of concerns about manufacturing growth over the course of this year in China, how much that's actually contributing to GDP, it makes sense that authorities in China would really want to sort of boost spending on services as they kind of try to transform this economy over time and really kind of, spur more growth within the Chinese economy right now.
Ooh.
Yeah.
What is that?
Malatang.
Ooh.
Yeah.
Yeah. I'll take that over a handbag.
Any day, actually. Right?
Our producers are laughing. Yeah. But no, the video itself is enough to spur a trip, maybe. Jill D says thank you. Our Bloomberg News desk editor joining us on the experience economy. We got plenty more ahead. This is Bloomberg.
Here's some global stories we're tracking at this point. Nobel Prize-winning economist Muhammad Yunus has been sworn in as the chief advisor of Bangladesh's interim government. Now, his initiation comes after student-led protests forced the prime minister to flee the country. Now, the opposition is now pushing for elections within the next 3 months. The last interim military-backed government stayed in power for 2 years. The U.S., Qatar, and Egypt are calling for Israel and Hamas to resume ceasefire talks on August 15. The framework for a truce will be based on principles outlined by President Biden, including a complete halt to all fighting and also a prisoner exchange. Iran says Israel must agree to a Gaza ceasefire to reduce tensions in the Middle East. Now, the Russian military is battling to repel Ukrainian forces in the Kursk region after one of the largest cross-border incursions of the war. The Pentagon says the move is consistent with U.S. policy after reports the incursion involves armored vehicles supplied by Washington and its European allies. Sources say Russia's army chief is now under growing pressure after seemingly dismissing intelligence warnings of a possible assault.
Republican presidential nominee Donald Trump is pitching a series of debates with Kamala Harris in September. Trump's team is offering debates on Fox, NBC, and ABC. The Harris campaign says it's happy to have a conversation about additional debates beyond the one they've already agreed to. Speaking with reporters at Mar-a-Lago, Trump criticized Harris for avoiding media interviews since securing the nomination. Trump also told reporters the president should have some say over interest rates and monetary policy. Such a move would go against the long-standing practice of keeping the Fed independent from political actors. Trump has repeatedly complained about the issue and criticized Fed Chair Jay Powell for being both a bit too early and too late on moving interest rates.
I think that in my case, I made a lot of money. I was very successful, and I think I have a better instinct than, in many cases, people that would be on the Federal Reserve or the chairman.
All right, taking a look when it comes to markets, quite a bit of Japanese earnings to kind of walk you through. So Mitsui Mining there, so they did actually beat estimates and also lifting that full year view. So the stock is up some 6%. Kokusai Electric also gaining as also a beat there for the first quarter operating profit. And Nexon shares, there you go. We're falling some double digits here right now. At one point, we're falling the most since March of 2020, despite the fact that second quarter operating income did beat estimates, but did fall there when it comes to net profit, dropping 2% on the year. Also, when it comes to Resonic Holdings, this is a chemical products company. They also boosted their full year guidance, and that certainly is lifting the stock here today. One stock that is still not catching a break is Shiseido. Take a look at the last 2 days we've seen for this stock. It's basically the biggest two-day drop we've seen since 1975 after they reported that first half loss. They've been citing, of course, weak demand from China, Dave.
Yeah, no amount of makeup can cover those ugly set of numbers. 50 years, two-day drop there. It's quite substantial, too, and I think it's not as if the stock has done well over the last 2 years or so. We've already seen a downturn. It's done well this year up until the peak, and yeah, these are moves we don't normally see. Now, let's end this on a fairly bright note. We're looking at semiconductors doing very well in the Asia-Pacific. So TSMC, big move overnight, big move today. And the broader benchmark might be indicative of what we might see in the U.S. in the Friday session. 3% to the upside for this group. I think it's a group of about 8 stocks that we have here that we track at Bloomberg. 2.9% to the upside. TSMC, as you can see, is bottom of your screens, up 3.5%. 7 stocks, by the way. SK Hynix, TSMC, Advantest, MediaTek, Disco, Tokyo Electron, and Samsung Electronics. Now, we're going into the Tokyo lunch break on better footing as we wrap up this fairly manic week.
I mean, manic is definitely, particularly global macro movers, right? It looks like things are stabilizing. And you can thank the U.S. jobless claims number for that. And it's quite rare for markets to move this dramatically after a U.S. jobless claims number.
On that data print, yeah.
Yeah. So I think this goes to show how sensitive this market is to any sort of news about whether the U.S. can they actually stick this landing here? Are we actually still talking about Goldilocks, as Monica Hsiao from Triada had mentioned here? But yeah, that certainly did help lift stocks. Bonds as well, we saw a bit of retreat there in the Treasury market. That certainly is what we're seeing here across sovereign bond markets in Asia. But yeah, I think the fact that we have a jobless claim print that was stronger than expected, less than feared, and then you have the U.S. CPI print next week. That's certainly going to be the next thing to watch. But people are suggesting, from now until the next September meeting, it's 5 weeks. I don't think we're going to get enough data to suggest that we're heading to a recession in that time frame. That's why we're paring back some of those Fed cuts and the like here. Plenty more ahead. This is Bloomberg.
China undoubtedly has been the cheapest market within Asia. This is where we have been focusing on stock selection over the past couple of years. Policy tailwinds are starting to appear as well. So we feel that China can actually be outperforming when the other markets have been so volatile. We also know that China is probably underowned globally, so that also adds to some attraction there. I hope they will be a little bit more careful. But underlying data from Japan, I know that domestic macro, GDP numbers have not been great. But if you look at the more micro aspect of, for example, wage hikes, we see labor shortage everywhere ongoing. And so we believe that the wage hike trend will continue. So all of those things together, we don't necessarily feel that raising rates further is not out of the question.
JPMorgan Asset Management Asia Pacific Equities PM Aisa Ogoshi, they're speaking to us a little bit earlier about the prospects in China, about the prospects in Japan as well. She still sees those two markets outperform for the rest of the year. In terms of what we're looking like as we get into that lunch break in Tokyo, there you go. Relief. You guys deserve it after the week that we had across Japanese equities there. We're one percent upside here. But basically, I think the Topics and the Nikkei have recovered nearly half of their losses since the BOJ last hiked rates. We're still off about 15% from the records that were reached in July.
Thank God.
But I mean, it's crazy. We basically got into a bear market in 3 days, right? So, obviously, we're still talking about some nerves here across these markets. 147.36 for dollar yen.
Yeah, you really got to feel for the retail investor too, maybe, right? That got in towards the tail end of that, maybe borrowed some money, got the margin call that probably people are not used to getting actually in Japan. Speaking of what a week it's been, so we put a chart together, 10-day vol on the Topics Index. There are only two comparable episodes in history, pretty much, that are comparable to what we've seen the last 10 days or so. It was during the GFC and during the post-bubble burst in Tokyo in the early 90s. So I think this underscores how manic this week has been. And while you are getting price moving up in Japan, we are still getting fairly elevated levels of implied vol, although that could come off very, very swiftly if the rally, of course, does continue. That's a big if. Okay, the rest of the region, though, looking like this. We're looking at across sector groups, though, so we're doing quite well, as Yvonne is pointing out, because of what's happening in Japan, and you have some of these big names in the IT space. Hence, the IT index is up 2.7%. Taiwan, bottom of your screens, up 3.3%. Right, so this week's the upheaval in global equity markets is prompting investors to turn their attention to some emerging markets where their ownership has been falling in recent years. For more on what the sweet spots are, Catherine Nye, who leads our Asia equities coverage, is here with us with a story here. Yeah, they've been putting their money to work amidst all this madness this week.
Absolutely. I mean, this is a win for the underdog, if we could say. We love those stories. But, we're seeing gains in places like Jakarta and Malaysia, and two areas where Goldman Sachs has highlighted this week as relative, I don't want to say safe haven, but relative safe spots, right? Places that, despite what's happening in the U.S. and Japan, they are relatively immune. We're also looking at places like India, where foreign ownership has been falling for so long, right? It's really kind of a domestically driven growth story. And, of course, China, where we know all the broader economic woes, but this is a place where people are saying, hey, valuations are cheap. This might be the place to put your money.
Yeah, I mean, Southeast Asia has been largely overlooked all year. What makes them attractive now? Is it just the valuation, the domestic stories?
Yeah, part of it is we think of Malaysia, strong currency, political stability with Anwar coming into a second year. People are feeling a little bit stronger about the economy. We don't talk about Malaysia very much, but we were just a couple of weeks ago, we were looking at Malaysia possibly overtaking Thailand, for example, in terms of market cap. That's a huge deal. I mean, a lot of that was driven off the data center play, but there are other things going for it as well, and real estate and things like that. I think Jakarta has been a really strong one for so long, and I think this one is kind of the seen as just a really sort of, the economy is doing well. We'll see what happens next week with the budget, of course, but areas that are getting a little bit of light.
Yeah, getting the spotlight for once, right? Catherine, thank you so much. Catherine Nye there who leads our Asia equities coverage. And to her point, right? So I think next week, Southeast Asia, we have the Philippine central bank decision coming through. And I think Sonal Varma of Nomura, who came on this week, said she expects a cut there. In Indonesia, too, bringing that forward, expectations for rate cuts. So policy tailwinds, right? Just ahead, speaking of India, we talked about that too. So Gautam Adani's nephew, Pranav, is overseeing Adani, the consumer business of the Adani Group. So our exclusive series taking you inside that specific part of the business is just minutes away. This is Bloomberg.
India's Adani Group has told Bloomberg it's confident of meeting a 7-year deadline to revamp one of Asia's biggest slums. That's despite a threat from the main opposition party to halt the project if they win this year's state elections.
Yeah, and the last of our exclusive interview series with the Adani leadership team, we meet a family member in charge of the group's most complex and high-profile project.
This is Pranav Adani, nephew of billionaire Gautam Adani, one of the most powerful and controversial figures in Indian business. He probably looks out of place walking through Dharavi, which is Asia's biggest slum, located in India's financial capital, Mumbai. But he's visiting this area made famous by the movie Slumdog Millionaire because he's leading one of the most challenging projects the Adani Group has taken on.
Thank you.
Pranav is spearheading the redevelopment of this network of makeshift shelters and structures, which is home to about 1 million of the most disadvantaged people in the city. The Adanis see developing the area as key to Mumbai's evolution as a modern city. However, many who live here worry they'll be left without homes and livelihoods. They fear they will have to move out of their houses and close their businesses to make way for modern apartments, offices, and malls. Bloomberg's Anto Antony asked Pranav Adani in an exclusive interview about the challenges the controversial redevelopment poses for the Adani Group.
It looks like a very complex project to execute because there are so many socio-economic challenges. How are you planning to go about it?
Dharavi project is, of course, a challenging project. It's a project that, since the last almost 4 decades, different governments have been trying to redevelop. Finally, now they've been able to do it. We were very aggressive while bidding. We bid almost 2 times, twice the second bidder that we had over there. While yes, it is a good financial project, but at the same time, what is important to us is the kind of purpose that we will be able to do for a project like this. The purpose to be able to change the lives of almost 1 million people. And I can also tell you that it's a project like this which will really help us build the legacy for the Adani Group.
You knew that there would be political opposition and protests and so on related to this, and we are seeing some of it play out. Now, are you having a rethink, or are you sure that you will be able to finish the project on the timelines decided?
Oh no, now we are double confident, because at the end of the day, when we talk to the people at the ground level, those are the people who are really wanting the change. Those are people who are really waiting for a better life. We are talking about almost 3rd generation people who are wanting to see a change in their lives, getting out of this inhuman conditions, and they said that they are fully supporting us.
But not everyone is taking the Adanis at their word. As Pranav walks the narrow passages that connect the dwellings, accompanied by his security team, residents approach him with their concerns.
Everyone should get a room over here only. Do not shift us other anywhere, like Solpen or Victoria or here and there. All our people must get here only room, and we must be satisfied. Give us some letters. What do you want in the letters? That you are giving us or no, or you are going to do you want, okay. You should provide people's letters.
Pranav is confident that the group will complete the Dharavi redevelopment project in 7 years. But it's not the only thing on his plate. Pranav, who is the son of Gautam Adani's elder brother Vinod, is in charge of the group's most consumer-focused businesses through joint ventures with food processing giant Wilmar and French energy major Total.
He was in BMC before that.
He's also responsible for protecting the Adani brand, a role that's attracted fresh scrutiny since the group was accused of fraud and stock manipulation by the short seller Hindenburg Research last year.
As the senior most among the second-generation leaders, what could you have done differently to avoid the kind of allegations which were posed by Hindenburg?
So I think, yes, there were learnings, I would say, from the whole Hindenburg episode. As a group, we have always been very focused on operational excellence, on execution. There are times when we have missed out in the kind of communications that we should do to our shareholders, to media in particular. Now, from an optic point of view, we have become very clear that we go out and communicate more transparently about the structures and about things like the finances. In particularly, I don't know if you lately heard that we are also very clearly working towards bringing down the EBITDA to debt ratio. So now we are getting our ratios also, and we are going out communicating more.
I think the Hindenburg allegations in the report caught you or caught the group kind of by surprise. So if a situation like this comes up again, how will you manage that differently?
Like I said, there was a lot of learning that happened during the Hindenburg episode. And now I think as a group, as a team, we are very well equipped to fight any such situation that comes in future. One is, very clearly we should try and make sure that nothing like this comes in. But now the systems are set up in such a way that in future ever, if there is any such financial attack on us, we are much better equipped through resources.
There are accusations and allegations that the group's surge in market cap, the jump in the family's wealth, is due to its relationship with Prime Minister Narendra Modi. When you talk about crony capitalism in India or in this part of the world, Adani's is one name that keeps coming up. So it also kind of reflects in the way the stocks are volatile when election results come out. How do you assuage these concerns?
See, again, these are issues that have come up in media or by vested interest, frankly. As a group, we are in almost actively in 24 states. We are invested in 24 states out of the 28 states in India. And when I say we are invested, that means we are heavily invested, whether it is infrastructure, whether it is energy, whether it is resources. We are actively involved. Now see, any time when you have large investments in any state, it has to be aligned with the priorities of the state. Yes, of course, we are close to all the leadership of the state with different political parties. It is not that only one political party is running all the states. Different political parties are there across all the states, and we are close to them. Don't forget, whenever they do this investor summit, they actually come and invite us to come and invest in their states. So of course, when you're doing any large project, you have to be close to them. We are also invested in a lot of neighboring countries. Now, when we enter any neighboring countries, besides financial decisions that we take on the project, how good they are, we also look at what that host country requires. Whether it's infrastructure, energy, resources, we are aligned with those countries' national priorities. Then the most important is the strategic interest of India also should be aligned. So when all those three aligns, I think this is the best investment strategy. So I think it's false and incorrect to say that Adani Group is only invested or is only looking at where the present party is invested.
Pranav Adani there, who runs the Adani Group's consumer businesses. And our exclusive coverage inside Adani continues later with a special report. That's coming up 11:30 a.m. Friday. We're finally here, Hong Kong time, with an encore presentation at 7 p.m., which is 4:30 in Mumbai. We got plenty more ahead. This is Bloomberg.
Welcome back. Here's a look at your China brief today. A look at what's making headlines in national newspapers and trending on social media. Well, there's more commentary on China's moves to tame this unrelenting rally so far in government bonds. The official WeChat account of the China Foreign Exchange Trade System, or you probably hear CFETS, published an opinion piece by a Bank of China senior trader. He says that a PBOC's reported intervention prevented the yield curve from declining and helped calm in domestic and financial markets during this week's turmoil. Now, the piece also hailed the central bank for taking decisive action under such a severe external situation, showing great courage and responsibility.
Meanwhile, the state-run tabloid Global Times is going big on doping controversies in the Olympics. There's a scathing editorial in today's edition calling out the U.S. anti-doping agency for allegedly covering up violations by American athletes over the years. And the paper has been publishing op-eds on the issue almost every day since the Games started. An editorial earlier this week slammed the treatment of Chinese swimmers, saying that they've been, quote, drowning in endless doping tests and hostile attacks, mainly from U.S. politicians and media. Min Lo, she's joining us now here. And there's a new twist in this whole anti-doping scandal. What's going on?
Yes, so Reuters first broke this news. According to them, the USADA had allowed athletes that were tested positive for doping to continue competing for years in exchange for uncovering more information of violation by other athletes. And this has been going back as far back as 2011. And they only told the World Anti-Doping Agency, which is WADA, in 2021, 10 years after the fact. And WADA said that they have no choice but to agree to the U.S. request to close the case because these athletes are retired now, and they said there is a risk of retaliation, a fear for the security. And so that's what's happening now. And what I said, if they had known, they would not have allowed it. It's a clear violation of the rules.
Okay, the response from USADA then is what?
Yeah, so USADA is saying that they were allowed to do that. They said it is necessary, it is effective in uncovering the broader system of trafficking and doping. Okay. Yeah, and they said they would like to continue doing so, but they will refrain from doing so now that there is no clearance from WADA. And there is a clause in the anti-doping code that says that athletes who substantially assist in anti-doping investigation, they can apply for a partial lifting of any ban after prosecution. And that's a key word here because these U.S. athletes were never prosecuted. That's where they have violated the rules. And as far as WADA knows, there are 3 athletes. 2 of them are low-ranking ones in the running circuit, but one is an elite-level athlete who has been able to compete, as if he never cheated. His results were never disqualified. His prize money was never returned.
The backdrop of all this whole doping scandal was around these 23 Chinese swimmers that were still allowed to compete in the Tokyo Olympics. Have we seen any developments there?
Yes, WADA has come out to defend their actions. They said they have a very robust testing regime, and these athletes, they were tested many days before and after that single trace positive test. And they accepted the reason of food contamination because they tested hundreds of meat samples. There was traces of steroids. And they said that this is common in other countries as well. It has happened in the U.S. as well, even in the last few months. And that's why you have China accusing the U.S. of double standards, because you have that sprinter, remember, he was cleared to compete in Paris, even though he tested positive for a banned substance in March. USADA says that he was cleared because it was a case of food contamination.
Oh, yeah, it continues, even though we're ending this Olympics this week.
Instead of focusing on the sport, right? Like we've been pouring over this back and forth. Anyway, I don't think it's last we'll hear of this.
I don't think so. All right, maybe to the next Olympics. Min Lo, thank you, our China correspondent, with all of that. But yeah, what an Olympics it's been, right? For Hong Kong and for the Philippines, Dave.
I
think we're matched here right now.
2 golds and 2 bronze medals.
Yes.
Each. Yeah.
I think we might end that way, though. I don't know. I don't know if Philippines still has some room there to get more medals, but yes.
I think our last 2 bronzes were yesterday in boxing.
Okay.
And the other 2, of course, were for our Carlos Euler.
That must have been your favorite, the boxing match.
Our gymnast. Yeah, they underwhelmed. I mean, I was expecting more than a bronze, and I think that's what's interesting too about this, right? Because in the Philippines, it's basketball, it's boxing, and then suddenly our gymnast actually above and beyond. I would say most expectations.
2 golds.
2 golds, right? And a lifetime supply of, and I'm sure you've seen it on social media.
Ramen. Colonoscopies.
When he's 45. So if, a drastically reduced probability of colon cancer. I think he has several houses. I think 1 from the government, 1 from the private sector. Cash. Although this is insider baseball, the focus has really been the drama between him and his mom.
Oh, yeah.
Which is a complete sideshow, if I'm being complete. It's very distracting. I wake up to news of this every day. And I just want it to disappear.
But Hong Kong, I mean, it's interesting too, right? When we've been talking about the payouts they get also. I mean, I think it's one of the most in the world. I think it was around 5 mil. 5 mil.
7 million Hong Kong.
5-6 million Hong Kong? I could be wrong.
Yeah.
But it's a big paycheck if you win a gold. Vivian Kong certainly has been the one. I mean, there's been a bit of controversy around her as well. She retired this week after she won that gold, but there's been some backlash about some thesis that she may have written back then, and then it's caused her to, critics say that she's pro-government. And
it got politicized, the thesis.
Yes,
right.
and it's just like, can't we just separate sports and politics for once? I mean, this is such a glory for Hong Kong that we won 2 gold medals in fencing, 4 total. I mean, that's just a record for us.
Right.
Yeah.
And what they're getting, is it free business class tickets for a year from Cathay Pacific?
From Cathay Pacific.
Or 1,000,000 miles. or 1,000,000 miles.
Yeah.
They're going places.
I feel like little boys and little girls in Hong Kong are all just going to take fencing now. Not they did already 4 years ago, but even more now.
And you and I were messaging about this, was it 2 days ago? That the Paris Olympics are ending, and in a few days, something in Paris is beginning again.
He's talking about Emily in Paris. Yes.
Didn't come from me. I woke up and saw this message from Yvonne. Watch the trailer now.
Yeah.
Season 4.
Not done with Paris yet. Okay.
August 14.
We're not done with these markets either. Let's take a look at how things are doing. It's overall risk rally here. So, yes, we are still tracking this rebound across stocks here this morning. CGBs, though, there you go. So the trade-off is that we actually are seeing CGBs sell off. Just given what we saw, there was that CPI print, which, despite that headline, actually we're seeing a sell-off, just given that it was one of the higher prints that we were expecting out of inflation for some time.
Yeah, the rest of the region is, so we're doing quite well going into the weekend here, stable. We're still lower, though, for the week, given, of course, how bad Monday was. But the momentum has really been picking up. Volumes have been picking up, too. Construction stocks in Japan, just one area, and the market is, by the way, shut for the lunch break right now, but certainly some big moves here on the back of that earthquake that hit the Southwest Island. Yes, quite a strong one, in fact, 7.1 magnitude here. And we're looking also at, I think as far as movers go, this is it for now. And global macro movers going into the weekend here, solid footing as far as risk, and some buying coming through as well in this beleaguered, up until this point, commodity space. That's it from us here on The China Show. Have a great weekend ahead, and we'll see you on Monday.